Hello, today we will talk about one of the secrets that helped John D. Rockefeller, the so-called oil king, build a huge fortune that many people can only dream of. But that secret is not business tricks or quick-fix investment deals. What Rockefeller pursued was a long-term investment mindset. It sounds simple, but in reality, most of us are stuck in a very short-term financial cycle. Something like, as much as you earn, so much you spend. If you have some extra, buy a new phone and new clothes. Many people even borrow to spend, borrow to live luxurious first and then pay back the debt later. Rockefeller, on the other hand, was the complete opposite. He didn't just think about making money today, he always asked the question, will this financial decision make me stronger in 5 years, 10 years? So, what exactly is special about his long-term investment thinking? How can you learn and apply it to your own life? Let's get started. 1. Investing is sowing seeds, not reaping immediately. Rockefeller once said, I didn't try to get rich overnight. I built it brick by brick, carefully, patiently, and I never stopped learning. Instead of rushing into quick-win opportunities, he chose to invest like a gardener, sow seeds, fertilize, wait, and then harvest. In his 20s, he did not spend money like many of his contemporaries. Instead of buying luxury carriages or big houses, he used that money to buy knowledge, expand relationships, and make small but sustainable investments. The important thing is, he does not expect to spend money today, tomorrow will be profitable immediately. He understands that real value will accumulate over time, and those who are patient enough will be the winners. 2. Use money to make money, not spend it all. This was one of Rockefeller's survival principles. For him, every penny was not to satisfy temporary needs, but had to be put to work. He always wondered, can this coin help me generate passive income? Can it be profitable in the next 3 years, 5 years? For example, instead of buying a luxury item, he would consider investing in a small piece of land, or investing in a manufacturing facility. These may not generate immediate profits, but over time, they can become the foundation for a financial empire. Hearing this, you may wonder, but I don't have much money to invest as much as he does. The answer is, you don't need to invest a lot. You just need to think right from the first small coins. Every time you have money, whether it's a few hundred or a few million, get into the habit of asking yourself, should this money be spent, kept, or invested to create value later? 3. Don't chase quick profits, look at the long-term benefits. One of the things that set Rockefeller apart was his commitment to long-term goals, even when the market was up and down. There were times when oil prices plummeted and many people panicked and sold, but he kept his faith in his core values. Not because he was reckless, but because he had done his research, understood the industry, and knew that patience would always be rewarded. This thinking can also apply to you, even if you don't invest in oil. For example, instead of depositing money into risky, virtual profit channels with 30% per month interest, choose reputable investment funds, which, although low in profit, are stable and safe. Instead of buying a house for speculation, buy a house that you can rent out steadily for 10 years. Instead of pouring money into coins, stocks to follow the trend, invest in skills, knowledge, or long-term relationships. 4. Patience is the greatest asset of a long-term investor. Rockefeller didn't get rich quick, he got rich steady. And the biggest difference between get rich quick and get rich steady is patience. He is willing to wait a few years for an investment to ripe. He is willing to spend time observing the market, learning about the business, and seizing opportunities, instead of jumping in without fully understanding. And so, while others are at risk, he is steadily profiting from his well-prepared decisions. If you're feeling rushed, stressed out in your financial life, it could be because you're thinking too short-term. Try changing your mindset once. Investing is not about winning quickly, but about building a solid future. 5. Lessons from Rockefeller for you today. At this point, we can draw a few simple but extremely important conclusions. spend less than you earn. Invest whatever is left over. Invest in what you understand, and can control. Think long-term value, not short-term pleasure. And most importantly, patience, patience, and patience. Remember, financial success doesn't come from lucky strikes. It comes from small decisions, repeated correctly every day. 6. Understand core values before investing. One of the common mistakes of many people today is investing without really understanding the nature of what they are investing in. Rockefeller was different. Before investing money in any field, he always asked, "What is the real value of this product, this business? Is it sustainable in the next 10, 20 years?" When he invested in the oil industry, it was not because he was fascinated by oil drilling technology, but because he saw that global energy demand would continue to grow strongly for decades to come. He understood that oil was not only used to light lamps, but also for industry, transportation, and countless other areas. From here, the lesson for you is: before you put money into a project, a stock, or a business model, take the time to do your research. Don't follow the crowd. Don't invest just because people say it's good. Ask yourself, what is its real value? Will it help people in the long run? Will it be around in 10 years? 7. Know how to give in to grow stronger later. Here's an interesting little-known fact about Rockefeller: he wasn't a man who insisted on winning every game. On the contrary, he was willing to give in when necessary, as long as the long-term goal was still in hand. During the process of building Standard Oil, he accepted concessions from small competitors, even letting them prominently gain popularity for a while, only to later, when everything was ripe, buy them back and integrate them into his system. He doesn't care who's better than who in the next year or two. What he cares about is: in 10 years, will I still control the industry? In 20 years, will my company be the first name people mention? What do we learn here? Sometimes, don't be too hasty to fight for every little thing. Don't be afraid to take one step back to take 3 steps forward. Focus on the big picture, not short-term wins and losses. 8. Risk management, the survival factor of long-term investors. Long-term thinking does not mean taking all risks. Rockefeller was extremely cautious about risk management. He always kept a reserve fund, even when business was going well. He never let himself go broke because of a bad deal. His famous quote is, "Always prepare for the worst, even when you are expecting the best." For you, this could be as simple as: always have an emergency fund of 3 to 6 months of living expenses. Don't put all your eggs in one basket. When profits come too fast, be wary. 9. Saving isn't being stingy, it's knowing you're investing in your future. Many people think that Rockefeller was frugal because he was stuck in a rut, but the truth is that he was very clear between spending and investing. For example, when he was young, even though he had earned a lot, he still lived simply, dressed simply, and did not compete. All of this was to accumulate and prepare for the big leap later. You may not need to live frugally, but ask yourself every time you're about to spend money: is this spending going to bring me long-term value? Or is it just for immediate emotional gratification? A cup of coffee a day is not a problem. But the feeling of having to upgrade your lifestyle every time you have more income, that is the big trap. 10. Investing in people, the biggest reward in the long run. A very profound point in Rockefeller's thinking that few people mention: he not only invested in oil, machinery, or land, but also invested heavily in people. He builds a loyal team, trains talented people, and does not hesitate to share profits with those who are truly capable. Because he knows, alone you can go fast, but a good team will take you far. In modern life, this is also a valuable lesson. Invest in lasting relationships. Learn how to choose the right people to work with. And don't spare the time to build trust and reputation, because that is an investment that cannot be stolen or depreciated. 11. Never stop learning, because the world is always changing. Did you know that even though he was a billionaire, Rockefeller still took time to read books, learn from others, and observe the market every day. He was never complacent with what he knew. And that's why he was always ahead of his competition. For you, the lesson is: don't think you know enough. Every day, learn something new, whether it's about finance, technology, psychology, or soft skills. Because the slow but steady learner always wins over the smart but complacent one. 12. Rockefeller and the art of calm in chaos. If you think long-term investing only works in peacetime, look at Rockefeller, who weathered a series of economic crises in the 19th century. From the financial crisis of 1873 to the Great Depression of 1893, he not only did not get caught up in the panic, but also took advantage of them to expand his oil empire. When everyone was selling, he was buying. When businesses were going bankrupt, he was buying them at a discount. When the market was falling, he saw opportunity, not danger. He has a very famous saying: "I always try to keep a cool head when the world goes crazy." 13. Long-term thinking equals cyclical thinking. Rockefeller understood very well, everything has cycles. Prosperity and decline, increase and decrease, up and down, are completely normal. And a long-term investor needs to learn to take advantage of the cycle, instead of being controlled by it. For example, when the market was rallying, he didn't get caught up in the euphoria. When the market went down, he didn't run away. Instead, he plans for each phase, preparing scenarios for both good times and bad. You can also apply this by: always keep cash in reserve to take advantage of opportunities when a crisis occurs. Don't invest all in when the market is hot. Always have a safe exit plan if things go against expectations. 14. Turn crisis into leverage. Rockefeller once said, "It is in times of chaos that the coldest decisions make the difference." During the crisis, when many small companies went bankrupt because they could not withstand the pressure, Rockefeller buy them back at rock-bottom prices. Merged into Standard Oil system. Restructure the way he wanted, creating an extremely efficient operating machine. Just imagine, if he had panicked like most people, he would have had no money left to buy in. It was because he kept a long-term mindset, prepared in advance, kept his faith, that he was able to act against the current. 15. Long-term investing does not mean holding on forever. One more important thing: Rockefeller was flexible. Many people think long-term investing is buy and hold for life, but the truth is not that simple. Rockefeller was still ready. Sell when a sector is no longer as promising as before. Reinvest in new areas with longer-term potential. Exit at the right time to preserve profits and prepare for the next cycle. You see, long-term isn't about being stubborn. It's about pursuing sustainable goals, but being smart enough to adjust your strategy when necessary. 16. Focus on what you can control. In times of crisis, it is easy to fall into a state of insecurity, worrying about markets, policies, inflation, war, etc. Rockefeller chose to focus on what he could control. Operating costs. Product quality. System performance. Staff. Instead of lamenting the fall in oil prices, he improved his processes to make production cheaper. Instead of fearing government regulation, he focused on building a strong, transparent network that could withstand political pressure. You can also start by: review personal spending. Improve your career skills. Building a sustainable income system. Remember, the world is always changing, but preparation and discipline are things you have complete control over. 17. Long-term thinking: don't trade trust for short-term profits. Rockefeller placed great importance on personal prestige and corporate brand. He has turned down some lucrative deals, simply because he felt they went against his principles. A quick profit that loses confidence is a big loss in the long run. And that's what made Standard Oil one of the most respected brands of its time. In modern life, you should also ask yourself: will this decision cost me my reputation? Is it really worth it to trade a little profit for the doubt of others? Looking back 10 years later, do I regret this? 18. Reconnect. So what is long-term thinking anyway? Long-term thinking is not simply about time, it is a way of looking at the world and life. It helps you. Don't get caught up in the trend. Know how to be patient in action. Have a plan for both sunny and rainy days. Build a sustainable foundation, not only for yourself but also for the next generation. 19. Invest not just with money, but with systems thinking. Rockefeller left more than just wealth. He left his thinking, his way of doing things, and his vision for the next generation. From the time his children were young, he began. Teach them how to manage money, record every expense. How to reinvest profits, instead of spending. Set ethical principles in business, do not ignore personal values for money. For example, his son, John D. Rockefeller Jr., was given the responsibility of managing the fortune early on, not to enjoy it, but to learn how to operate wealth sustainably. 20. Build your family organization like a business. Many wealthy families collapse after 1 to 2 generations due to internal conflicts, excessive spending, or lack of clear direction. But Rockefeller was different. He organized the family as a financial ecosystem. Set up a trust fund to protect assets from risk and taxes. Establish a charity, like the Rockefeller Foundation, not just to give, but to maintain a lasting name and impact. Building a network of financial, legal, investment advisors, working with a long-term vision. You can see this more like a large company than a family. And it is that methodical organization that helps the Rockefeller family maintain sustainable wealth, not falling apart like many other billionaires. 21. Educate your children about responsible wealth. Rockefeller was very strict in teaching his children about responsibility with property. He did not let his children spend money recklessly, even though they were born into luxury. Instead, he emphasized, money is a tool to create value, not something to show off. Family members are encouraged to do charity work effectively and plannedly. Participate in education, health, scientific development. Stay away from scandals, risky investments, or extravagant spending. In other words, wealth is not a goal, it is a responsibility. 22. Don't focus on getting rich quick, but on staying rich for a long time. Do you know? Many wealthy families go bankrupt because the next generation is too busy multiplying money, but does not know how to keep and manage assets. Rockefeller always emphasized the opposite. Keeping assets and reputation is the most difficult thing. Getting rich once is easy, keeping it for generations is talent. That's why he invested in long-lived land. Many Rockefeller properties remain family-owned to this day. Value business, not speculative investment. Organizational system, so that assets do not become fragmented over time. You can learn this by. Don't be too obsessed with getting rich quick, invest steadily and surely. Focus on sustainable income-generating assets. Avoid falling into the trap of investing in trends. 23. Reputation equals greatest asset. One of the reasons the Rockefeller family has remained respected and influential is because they have maintained a positive image in society. Even when faced with criticism from the press of the time, Rockefeller did not react emotionally. Instead, he quietly invested in charity, in healthcare, education, and science. You think of names like University of Chicago, Rockefeller University, Rockefeller Institute for Medical Research, Rockefeller Foundation. Where does this come from? It's because of the mindset, building lasting impact is better than trying to prove it right away. 24. Long-term thinking is the greatest legacy you can leave behind. At this point, I want you to stop for a moment and think. What do you leave behind, money, or a way of thinking? Rockefeller proved that a lifestyle, a right mindset, can create more sustainable wealth than any amount of money. You don't have to be a billionaire to learn from him. You just need patience in action. Have a long enough vision. Know how to control emotions and temptations. Continuously learn and improve your personal system. 25. Invest in yourself as a long-term asset. Rockefeller always believed that you yourself are the first asset to invest in. When he was young, he didn't spend money on short-term pleasures. Instead, he spent every penny learning accounting, learning the markets, and learning how to read financial statements. Today, you can do the same. Invest in skills, learn a specialty that has long-term value. Invest in health, because health is the most profitable insurance. Invest in your mindset, read books, join quality communities, learn from those who have gone before you. Every day that passes, if you are 1% better, after a year, you are far ahead of many people. 26. Know how to wait for the right time, don't act because of peer pressure. Rockefeller once said, "I don't invest when the crowd cheers. I invest when people are scared." This mindset is extremely relevant in today's times, when everyone is caught up in breaking news every day. Social media makes you anxious because other people are getting it fast. FOMO, fear of missing out. If you act out of pressure, you are likely to lose money or yourself. Rockefeller was different, he was patient. He waited for the right opportunity, and acted decisively when the time came. To learn from him, you need to train yourself to patient. Know how to say no. No comparison. Have clear principles before investing or making big decisions. 27. Build a money printing machine, instead of just making money. Rockefeller didn't just work hard. He built a system, to let money make money. Today, we call it passive cash flow thinking. He invested in the business generates steady profits. Infrastructure such as railways, oil and gas, real estate. Dividend system, money flows in even if you do nothing. You can absolutely learn. Gradually invest in ETFs, dividend stocks, rental properties. Build a YouTube channel, blog, digital product that can generate passive income. Design automatic sales system, optimize cash flow. The goal is, don't do too much, but the money still comes in steadily. 28. Stick to your plan, even when the market turns. Rockefeller did not always win. But he had a powerful weapon that few people have, perseverance. He doesn't jump from idea to idea as the market fluctuates. Instead, he sticks to his long-term plan, and adjusts it carefully, without rushing. For example, when stocks fall in price, instead of selling, he buys more at low prices. When the economy is in recession, he uses his cash hoard to buy cheap assets. Lesson for you. Don't change your goals just because of emotions. Don't throw away your strategy because of a short-term shock. Remember, successful people are not more about IQ, but about perseverance. 29. Long-term vision equals short-term discomfort tolerance. Rockefeller understood very well. To get big results, you have to learn to tolerate the feeling of seeing nothing for a long time. When he first started his business, he was ridiculed and considered a fool for refusing to party like his friends. But a few years later, when everyone was still struggling with debt, he had his own company and his own financial system. The reality is, most people give up before the results come. They can't stand the first 6 months without results. They can't stand a year of studying but no money. They can't stand the slow pace of saving. Rockefeller accepted that. Are you ready? 30. Long-term thinking makes you immune to fluctuations. When everyone was fearful, Rockefeller felt calm. When everyone was rushing to invest, he sat back and observed. It's not because he's better, it's because he thinks long-term. That mindset helps you. Don't panic when the market crashes. Don't get emotional when someone makes money faster than you. Don't fall into the one-day, two-night game. And especially, know that true success takes time. We've just explored one of the greatest investment mindsets in history, the mindset of John D. Rockefeller. This isn't about get-rich-quick tips or short-lived trends. It's about core principles, foundations that helped him build a lasting empire that stood the test of time. His mindset was built on key principles: setting long-term goals and staying loyal to them, financial discipline, living below your means, saving consistently, like an unshakable habit, thinking in terms of cash flow, investing in systems that generate passive income, staying patient and resilient through market ups and downs, constantly learning and upgrading yourself, because you are your greatest asset, not following the crowd, but waiting for the right time and staying sharp, and most importantly, giving back, using wealth to create value for others. A long-term investment mindset won't make you rich overnight, but it will help you build a strong career, financial stability, and a life of depth and meaning. If you found this content valuable, don't forget to like, share, and subscribe to the channel so you won't miss future quality videos. Now it's your turn. How will you apply Rockefeller's long-term mindset to your own life? Leave a comment below. I'd love to hear your thoughts. Thanks for watching, and I'll see you again on the next journey of knowledge. Stay strong and steady on your path to long-term success.